and we can come together and just talk about it politely, and nobody knows what's going to happen. I have my hunch, I have conviction, just like you guys do, but Bitcoin dominance could go to 90%, and
someone
it could
clip
even
clip it and put that on Twitter. Max, I'll start with you first on this one. Do you think it's going to keep going up after the halving? It was going up in the spot ETF, and then it kind of waned a little bit following the spot ETF, but then it just kind of picked right back up. So what do you think is going to happen this time? And this kind of goes to the whole, like, the last question as well. Like, will there be a narrative shift in what people are focused on? Will they start focusing on more things besides, sticking with Bitcoin? Do you see, what are your thoughts on that, Max?
Well, first I have to give you a compliment, Ben, because you were one of the few people that, with a big following, publicly called Bitcoin dominance rallying to this point. I didn't expect it to get up to, I think it topped at 57 recently or wherever it did. You deserve a lot of credit for that.
Well, I'm known for riding trends too long. We'll see.
Well, we'll see, right? Nobody knows besides the market, right? Like, we all have our inclinations, but you deserve a lot of credit, because I remember months and months ago, I don't remember, it was probably 6 months ago plus, we did a space together, or you came on my channel because Bitcoin, and Bitcoin dominance was significantly lower and ETH BTC was significantly higher, and much has changed since then. So kudos to you. Where do I think it goes from here? So I think that Bitcoin dominance is in the process of, we'll call it, distribution. Okay. I believe that the meat of the move is over, but that does not preclude it from going a little bit higher than here. Maybe 60%. That's not my base case, but let's look left on the chart and use that to maybe forecast what could happen next. So ignoring the whether this is a left translated cycle or an expedited cycle, let's look at it contextually for where Bitcoin is at, from a PA perspective, right? So Bitcoin actually has gone on to get above the previous cycle all-time high of 69K. So most comparably, again, ignoring everything else, but just pure levels on the chart, pure, where was the cycle high, where was the cycle low? You could probably compare Bitcoin right now to like December of 2020. Okay. If we just ignore everything else and say, okay, Bitcoin in December of 2020 went on to sweep the previous cycle all-time high of 19.7. It paused there for maybe a month or something like that. It was chopping around. Altcoins got destroyed during that time, right? Bitcoin uncertainty, like you always preach, Ben. When Bitcoin is uncertain, alts get absolutely eviscerated. And we are seeing that once again, right? So again, comparing this period of time to December of 2020, there is turbulence under the previous cycle all-time high, which is not uncommon. We saw that again last cycle and then also 2 cycles ago. It seems to be sort of the same thing happening again. What did we see in December of 2020? What we saw was Bitcoin dominance basically put in a deviation or bull trap high, where when Bitcoin finally decided it was time to push through with conviction above the previous cycle all-time high of 19.7, you saw Bitcoin dominance put in an explosive move, which ultimately ended up being sort of a bull trap, for the Bitcoin maxis. So I think it's possible we are seeing that deviation high right now. Only time will tell. I do have hedges in place, like I'm holding some Bitcoin L2s like STX and some Bitcoin ordinals and things like that I think would be beneficiaries of, Bitcoin dominance continued rally, maybe above 60%. But of course, I am of the belief that contextually, with Bitcoin chopping under the previous cycle all-time high, seeing similar signs of Bitcoin dominance putting in, this last explosive push, I do believe that over the next 6 months or so, it would probably make sense to see Bitcoin dominance trend down dramatically. And additionally, and I don't mean to, bring this up because I don't know if this is on the agenda today exactly, I imagine that would translate to ETH BTC finding a bottom sooner rather than later. But that doesn't, again, preclude it from going down a little bit more. Only time will tell.
This is an interesting question. And to be completely honest, most people aren't going to care. But gold is one of these things where, like, it doesn't do anything for like 10 years, you know? And like, if you think about this entire Bitcoin's, like its entire history, essentially since 2009, gold has essentially gone nowhere. in that entire phase. But we just saw gold break to new all-time highs, and it seems to be a somewhat explosive rally. So I'm curious about what your thoughts are on gold. I often think that people who like gold are more alike to people who like Bitcoin than they would care to admit. I think the main difference is the generation that we are, right? So if I were born 1 or 2 generations ago, I probably would have been really into gold, but because I'm born into more of the digital age, I'm more into Bitcoin. So I think we're more alike than different. So I'm curious, like, what your thoughts are on gold here. It is now 2,300, 2,400. Max, where do you think that this is going to continue? And silver is also not too far behind it in its own move. And I guess the other question is, like, why do you think gold is rallying? So that's probably the bigger question is why do you think it's rallying rather than, like, what do you think it's going to go to?
Sure. Yeah, the gold strength is pronounced. It's very impressive. And I would say, I mean, why do people buy gold historically, right? It's sound money. It was sound money before Bitcoin. It was a store of value when, our parents' generation was nervous about the state of the world. They would, convert their dollars into gold. And, a lot of it is more of it's a mental thing. It's a mental insulation. It's not like if your country was invaded, you're going to put, 500 pounds of gold on your back and somehow travel to another country, right? But it's a peace of mind thing, and again, historically, it is, a sound currency. There is a scarcity aspect to it. There's a lot of commonality and overlap between gold and Bitcoin, and I think everything you mentioned, Ben, is correct. I would say that my bias on gold really stems more on my perspective and my forecast on where I think DXY is headed, and similarly where I think Bitcoin is headed. I've already shared my opinion on where I think Bitcoin is going. We have the Bitcoin halving just around the corner. I expect Bitcoin to trend upwards aggressively over the next 6 to 9 months. Subsequently, I do believe that DXY is forming a sort of a distribution here. I do anticipate DXY topping very soon. And again, if you just overlay gold with DXY on a weekly chart, you can see that there is a pretty prominent negative correlation between DXY and gold. So I don't think I'm not of the opinion that we're going to see a decoupling where there's suddenly a prolonged period of a positive correlation where gold rallies and DXY rallies. I think that one of them is lying. So either gold is lying or DXY is lying. I think that gold is leading, and you're going to see DXY, of course, sort of reclaim that negative correlation and begin to take a dive over the next quarter. So I do expect gold to continue upwards, and I think it's probably off the back of the DXY weakening.
Okay, yeah, fair enough. It has been really strong, and
Yeah.
I can't help but look at it. I'm like, wow, you have like a 10-year base. Like the bigger the base, the more explosive the rally. And I know like all the crypto, degens are like, it's up like 10% or something. And like people are like, 10% is like a minute candle on a meme coin, right? But for gold, for an asset that's that high market cap, like that is a big move in a really short period of time. And so what is the best way to learn about crypto and to do your own research? So I mean, I don't know if they're talking about like from a fundamental perspective, but like if someone were getting into crypto, like what do you guys use to do your research?
Yeah, I would start on one of our 3 channels. I think that's a really good place, not to spew the obvious, but I would say learn to do very basic TA, right? And understand cycles. Like there's some very awesome free indicators out there. Like, I mean, you can even just look at like, Ben has he's kind of coined a very famous one. He's combined a 20-week SMA and a 21-week EMA, which has been sort of marketed as the bull market support band for good reason, right? So you can determine when, Bitcoin is trending upwards, high time frame, or trending down by just a simple moving average band. There's also things like the Pi cycle top, which I think people should keep an eye on, which is again a free trading view indicator. Someone made it. It's also on Ben's website. There's also some good on-chain stuff like Bitcoin terminal price, HODL waves, things like that. I would, as a beginner, I would stay off the hourly time frame. Like literally just go daily time frame and above. And whenever you see Bitcoin down, 50% from its its all-time high, that's time to start paying attention to maybe consider entering the market. But learn very, very basic TA, and some of the more popular on-chain indicators can really help you just DCA at the right time, but stay off of the hourly time frames mainly.
Someone's asking the market's not pricing it in right now, but I did see like last night, there's been a couple of times here where like there's at least some investors like thinking about a rate hike. That is not like my base case at all. Like I think they're done. I think 5.5% is the terminal rate for this cycle. They might go higher next cycle, but I think 5.5% at the top. I'm not going to ask you if you think they're going to hike again, because I don't really think any of us think they're going to. If you do think that, let me know. But I guess my main question is, what do you think would happen if they did hike again? Because that would be, I mean, that would talk about markets not pricing it in, right? I mean, I guess the implication would be like if the economy just accelerates into again, and there's not a cool down, and we just keep on moving up. What would another rate hike do?
Well, what is Jerome Powell said about fighting inflation? Does he say that they're on the right track, or does he say like it's more stubborn, or what has he said?
They've kind of like the progress has slowed a lot, and I think they've kind of speculated that it might influence the number of rate cuts this year, because previously they had said 3 rate cuts this year, and I'm wondering if they're starting to walk. I mean, now the market is pricing in only 2 rate cuts through April of 2025. So my view is that I thought higher for longer, but now that everyone else believes it, I think it's going to go back the other way, because once the market fully prices in no rate cuts, that's when people give up, and you need to start having some rate cuts. But yeah, I don't know. I mean, Powell has basically said the same thing he said for the last 3 years. If they're going to keep rates higher for longer until inflation's durably going back to 2%.
Yeah, I think that 3% is the new 2%, truthfully. I appreciate their narrative and their consistency, and how they haven't wavered on that. And I think it's a great goal. But it seems like 3 is kind of a magnet, actually a little bit above 3. Like you mentioned, they are currently pricing in now. It looks like, our first 25 basis point cut on the September 18th meeting, and then through April of 2025. And these percentages change all the time, right? We'll see what happens, potentially taking us down 50 basis points off of where we're currently at. Let me answer your question. What would happen if we got another 25 basis point hike because, inflation decides it's going to rear its ugly head again and start trending up above, headline 4 or 5%, God forbid? It's over. I mean, like, we are going to absolutely nuke. If we get another rate, I'm going to be as clear as I can be. If we get another rate hike, markets are going to capitulate. Like, that will be awful, horrible for risk. Like, sell all of your assets, honestly. Like, if that happens, I'm not joking. I think it'd be terrible. I don't know if you guys agree with me, but that would be horrible for markets. But I don't think that's going to happen, to be clear.
I think you could have the same thing happen if they just refuse to cut soon enough too. Because like like a tightening cycle is not just raising rates, but it's also keeping rates too high for too long. And the median number of months that the Fed pauses is 8, and 8 would have been in March. So we've already gone 9. I think there's still a window where everyone talks about a soft landing, right? It's so hard to thread that needle to a soft landing, because you have to stay high enough to make sure inflation doesn't come back in a second wave. Because if you don't, and you get a secondary wave like the 70s, you get a hard landing. But if you stay high for too long, like let's say they stay at 5.5% for another 6 months, then you start to run the risk of a deflationary crash, right? So that's why everyone sort of rolls their eyes about a soft landing, is because it's so difficult to thread that needle. And I do not envy their job. I do not envy their job, because it's not. And they're also operating with long and variable lags. Like, how can they know all the effects of their prior monetary policy? So yeah, it's a tough place for them to be.
And we are. Oh, sorry, Rob, go ahead.
No, go ahead, Max.
I was going to say, we are seeing some smaller economies, in my opinion, forecasting when our rate cuts are coming. Like, we have seen the Czech Republic actually start to cut. We've seen Poland cut. So, historically, it's not perfect, right? But you are starting to see some of these smaller countries actually, they led through the hike. So they began to hike first, they paused first, and they've actually started to cut. So I do anticipate that in similar fashion to what has happened historically, we will see the U.S. begin to, I guess, cut rates, hopefully, later this year. But I do agree with you, Ben. Like if they held rates where they're currently at through, all of 2024, that would also put some pressure on our economy and our markets. But with that said, like I don't know what you guys think, but I mean, really the final, real dagger or domino to fall is going to be, of course, unemployment creeping up above 4.5%. Do you guys think that if they just held rates where they're currently at all through 2024, but we didn't see the labor market really deteriorate, could financial markets hold up in that instance?
I mean, if the labor market doesn't deteriorate, sure. I just think that, it seems like the unemployment rate is trending up. And the problem with that is that it doesn't tend to move in a linear fashion, right? It goes slow and then it starts to accelerate at some point. And we haven't reached the acceleration phase, right? So there's still a chance that we can avoid it, but the longer they wait, the riskier that's going to be. I think there's a higher probability of a rate cut this summer than the market is giving credit for. I don't think it has to happen this summer, but I think the right thing to do is to cut at least 25 basis points this summer, 50 basis points, something like that, just to provide something.
Are you thinking in the June meeting or July meeting?
I mean, look, last cycle, I know that the altcoin market was a lens into the consumer. And I know that when alts broke down against Bitcoin and when ETH broke down against Bitcoin, the Fed basically cut 1 month later. And we have seen ETH fall against Bitcoin. It had a weekly close below the June low. We saw Matic Bitcoin crash below its June 2022 low. We've seen ADA Bitcoin and DOT Bitcoin. We've seen Litecoin Bitcoin and Aave Bitcoin. I mean, so many of these altcoins are falling off their Bitcoin support levels, and you can see it with the Bitcoin dominance. So I think that the pricing out of all these rate cuts is going to cause them to get priced in, because the Fed does not base their decisions on what our altcoins are doing, right?
Unfortunately,
they don't care. What I find unfortunate is that a lot of the small companies, like mom and pop shops, a lot of them are going out of business right now because rates are going up and times are getting harder. Like inflation is so high, so people just can't afford as much. But the Fed has to do it because all of us degens in the space can't help ourselves from bidding up JPEGs, and leading inflation to where it was. So I think that it's kind of a tough spot to be. And the Fed has to stay long enough to kind of break the animal spirits. Yeah. But if they do it too long, then you run the other issue of a deflationary unwind, and that's not really fun either. I know people are like, oh, I'd love to go to the store and not spend as much money, but if prices go down, that's probably not good for risk assets. But the issue is why the Fed is cutting. Are they cutting because they're trying to get ahead of something bad that's coming? Or are they cutting as a reactionary thing because they just saw a really bad labor market print? And that is when they're not bullish. Like that's when rate cuts are bearish. So it all depends on, Max is right, it all depends on why they're cutting.
And I think that it's also risky to, I do believe that there's just as much risk to the upside, truthfully, where, assuming that they're going to cut because there is severe economic deterioration can also be, a very harmful strategy long term, because like you mentioned, the first batch of rate cuts that we saw in 2019, the S&P 500 rallied out of those cuts like 15%. And then, of course, we had our COVID nuke in March, which took us below, where that first cut occurred.
Right.
But, again, it's like you have to be very careful, kind of threading your own needle per se, because just because they're cutting doesn't mean sell everything, right? Because they could cut, the labor market could be more resilient than anybody's expecting. The S&P 500 could go up 50% over the next year, and then something bad happens and you get a correction, but that correction doesn't take you down to as low as the point in which the first cut happens. So you just have to be a little bit careful, truthfully. You have to really understand why they're cutting, and it's a tough thing to do. It's very tough.
Last question. And this is more so geared towards Max, because Rob is, you've been around here forever. We've probably even asked this question to you before.
Yeah.
But if you want to answer it, you
Max.
can.
No,
right?
Max has got
Max,
this one.
Yeah. So since you're new here, why did you start your YouTube channel? What was your motivation? What are you helping to accomplish with it? What brings you here?
Well, Ben, you actually played a big role in bringing me here. I was a very early follower of yours. Actually, before you even had your website, I bought your Google sheet way back in the day,
Gosh.
and I'm still locked into my original price. Thank you very much because I got in early. Pays to get in early.
Yeah.
Um, you know, I learned a lot from you in the very beginning, and I went through last cycle, and Ben and Rob, also this is a compliment to both of you guys. Amongst a sea of grifters and thieves and people looking to prey on unsuspecting retail, guys like yourselves, you conducted yourselves in a manner that, I mean, I can't even imagine how many millions of dollars you guys turned down from shill deals and, crap like that. And, I wanted to in the beginning play my part in that. I felt as though I had opinions that I could share, something to offer. I have an ability to lead. I have an ability to organize a team, um, and I wanted to play my part, my equal share in the sort of collective hive mind of CT and YouTube, and help educate. That's sort of the underpinning of what I'm doing. Is I like to teach, I like to collaborate, and making money certainly feels nice, right? But there's a certain sense of fulfillment that I personally get out of somebody messaging me saying, "Hey, because of what you said, it made a difference in my life and something clicked for me." And that feels really good. And I started because Bitcoin, and it's a small channel still. We're growing quickly, certainly, which of course, if you go to Ben's beautiful website and you overlay social media growth with the price of Bitcoin, you can see why I'm starting to grow quicker. I'm doing the same thing I was doing all bear market. It's just suddenly more people care about crypto. So I'm a result of good times, and I pray that they continue on, because of course it's a nice tailwind for my young business. But yeah, I mean, really, to answer the question point blank, I love to teach, I love to collaborate, and I love to debate. Like, I have a differing opinion than you guys are for some things, and there's some overlap, but that's what makes a market beautiful, is that you can think one thing, I can think another, and we can come together and just talk about it politely, and nobody knows what's going to happen, right? Like, we can't, I have my hunch, I have conviction, just like you guys do, but Bitcoin dominance could go to 90%, and
Someone
it could
clip
even
that, clip it, and put that on Twitter.
don't do that. Don't do that. Or it could literally nuke down to 10%, and we could have like the crypto equivalent of the NASDAQ bubble between 1995 and 2000, where altcoins bubble like people, can't imagine. Everybody's throwing money at altcoins, speculating anything that's crypto, and then 99 out of 100 of them don't exist in a couple years, So who knows what's going to happen? But yeah, I love to collaborate and teach and debate, and generally it's just a passion of mine.